Good afternoon. Time to wrap up September the 2nd, 2014. Hard to believe we're out of August and into September, especially when we step outside. Really, really hot here. We got another, I think, until Friday. So we got another 2 days of summer hanging on, and they promised us temperatures in the 80s. They've been wrong on that forecast before. Let's take a quick look at where we are today. We came in this morning. Our first trade was to be a buyer. We had identified this 2,000 area plus or minus to be a buyer. We got a low right here above 98.50. We had identified 2,000 as a number, so if you're long at 2,000, 2001, it did produce a winner. We got a beautiful retest failure here. Failed to take out the day session high. That's our sell signal, so we got a winner on the long side. Anticipating a retest of this number down here. Don't quite get it, so off of our retest failure, you had a nice little winning trade right here. Market comes back up, another beautiful retest failure, another setback trade with deceleration to retest the lows, and the lows come out. So right here is our reverse retest failure, plus or minus a couple of ticks right here. This little tiny skinny bar, we talked about that earlier, sets up the next move down, and then we come down and we get this beautiful retest failure off the bottom. So this morning we had a 95.97 was buy 2, 2,000 was buy 1. We wanted to get long, see if we could take out the overnight session high. When we did not extend the overnight session high, did not take it out, we turned seller. We said we could sell failure to take out the 2006 area. We didn't get it, and then we moved our buys down to 90 to 92, and we came in just on top of that. And right now, you can see that the 50-lot trader is long once again. So we had a good day of trading, and we can't forget that. Okay, what do we see for tomorrow? I think the long-term direction of the market is still higher. You can see right here on our F1 screen for the E-mini, got a higher low and a higher high, so we can still be in a buy situation. We're going to have really, really good support down here at the breakout at 86.50 to as high as 93. And you can see that this low volume area right here held and supported the market. So the market is still pointed higher. Do we have any news tomorrow that might support this? Factory orders are called up 11%. That's a huge number. That comes in, that will definitely be supportive. Auto and truck sales are still expected to be over 16 million. That would be a positive. So the scheduled news, if as forecast, would be positive for the stock market, still showing growth. And then we have the beige book. And the beige book is important because each of the regional Federal Reserve branch banks, so to speak, will do an economic analysis of business conditions in their region, and those have tended to come out, 9 out of the 12 have tended to come out showing positive growth. So the conditions are right fundamentally for this market to trade higher, and if the fundamentals aren't right, the Fed will step in and support it. So we still haven't seen rejection or selling yet. We're still making new highs, so it's hard to get, we can sell failure to extend those new highs, but it's really hard to get excited about being short until we see the news change or we have to see some follow-through selling. Okay, when we look at today's profile, it's pretty square, really from a volume standpoint too. When you look at it, it's just kind of up and down. So this is our pause day. We've got volume above time. Draw a line 50% into the distribution, and there's volume, so that favors higher prices. So we can be buyers into weakness. So right now, let's just make 91.93 buy 1. And our 86.88 buy 2. On the sell side, we're going to sell failure to take out 4 to 6. And obviously we got to get through 2000. So 2000, if we come up and we can't get through 2000, it's rejected, we can get short to retest this low. So sell 1 is going to be 2000 plus or minus, and then sell 2 will be failure to make new contract highs. A lot riding on tomorrow's orders, factory orders. Okay, we talked about it earlier. We're getting no lift or no rise in the financials. And that usually tells me lower prices without a change in news. The news tomorrow, if as forecast, would be supportive for the indexes, the equities, and not so for financials. Also, post-auction week, the tendency in financials is for them to sell. So we've got volume most recent in the market's memory at 05, and we've got this J period low at 2.5. So 125 even, 125.04 is probably pretty good support off the longer term chart, and because we have a lower high and a lower low, we're sellers off the bat. Looking at the F2 screen, is this confirmed? And we're looking at a very, very solid B. And this market is pointed lower. So we want to sell failure to take out. Last rotate up stopped at what, 11.5. The I period stopped at 12. J period stopped at a, looks like 11.5. K period stopped at 10. So we want to sell failure to take out 10 to 15, this area right here. And then we're going to be selling the 19 to 23 area for sell 2. I don't see any way to get above 16 though, based on what we have going today and with tomorrow's anticipated news. The news, if as forecast, will be stronger. So really trying to buy against this 125 area down here. But for Globex, we'll make it a 25.01, 25.5. Coming in tomorrow, we're going to make it a 24.29 to 25.01. But given Globex and the uncertainty overnight, we'll leave it like that to get started. Okay, the knob spread came in again today. It narrowed. They usually run it down into the auction. And there's a lot of talk out there about the strengthening U.S. economy. So maybe you don't need to own the financials. But we don't have to worry about that. We're not trying to position for 6 months from now. We're just trying to find good trades. So last rotate up stopped at 30. We're at 25, so 27 to 31 will be sell 1. Then leaning up against this low, 3s to 7 will be sell 2. On the buy side, we'll take it a little lower, 13 to 17 for buy 1. May take 21s to get into Globex, but 38.09 to 5 for buy 2. And we have a lot riding on tomorrow's news, factory orders and auto and truck sales. This market does react and it does trade fundamentally. Quite often crude and the E-mini don't. Most traders are willing to discount that. You know, I don't care what the fundamentals are, just let me get some volatility, and that's the appeal of the E-mini. It's a very, very volatile contract, or can be. We have a two-sided market. When it's all going one way, just nothing but to the buy side, then the volatility can drop pretty quickly in the E-mini. But normally you're looking for 12, 13, 12, 15 points during the day session. Okay, we have this low volume area here at 63, 65, and we got high volume down here at 62. So it's a B, display for lower, 60, 62 for buy 1. But if we can't crack this area right here, we may have to pay up, and then buy 2 will be 55, 57, picking up top of this high volume area, this low volume area right there. On the sell side, we have this low letter right here. We're at 66, so 70, 69 to 71, sell 1. And this area right up here, 74, 76, sell 2. I think we're headed for 1235 without an obvious change in the news. And it's just strictly a structural play. I don't think the buying is over by any means in gold, but certainly have taken some of the bloom off the rose. And this sell down started at 1341. 100 points below 1341 would be 1231. And there's somebody will take profits at $100. I'll guarantee you that. So there's a lot of things that are pointing to that 1230 to 35 area is for a potential low. Okay, crude oil just got hammered today, and again, the crude oil market is telling you that the supply is not in jeopardy. And the most usual occurrence after a trend day in crude is a pause day. So maybe a little bit lower in London, so 92 and a quarter, 92.50 will be buy 1. Quite often it doesn't take out this low, so we're going to put a question mark at 75. It's definitely a seller's market, so halfway between this F area right here, these single prints, we got some volume. So our 50 to 75 will be prime sell territory for us. On the assumption we can get it that high, the last rotate up stopped at 25. So we've got this 92.75 to 93.25 is kind of an indifference zone. We may have to act early. And then 4 and a quarter will be sell 2. But usually when we get a big day down or up in crude, we get a pause day. So we'll play for a pause day. Like to buy it cheaper, but don't know if I can. So be prepared to act at 75. And then the 91.75, 92 and a quarter would be the second buy area. Okay, now if you're trading crude and gold, you cannot get into these markets without knowing where you're wrong. And there's 2 ways to know where you're wrong. Number 1, like on the E-mini, I don't know if I'm right or wrong. I never know if I'm right or wrong, but I'm willing to risk X amount of dollars. And then you'll go find chart support or something around it. But crude and gold on a 1 lot, if you're wrong on a day trade basis, you can lose $1,500 to $2,000 position, and you have that exposure a couple of times a month, and you can't disregard that. You cannot put yourself in that position, and the market can come back, but usually these are one-way markets. They're pylon markets, and the history of coming back when you need them to come back is probably 0. The history of them coming back when you don't need them to come back is probably 50-50. And so you cannot allow yourself to move your stops or to trade these markets on an open basis. You have to know where you want to get out. And like I said, it can be arbitrary. And based on our entry studies, 17 ticks is about as far as you want to let this thing go based on our entry methodologies and our setups. Anybody in crude or gold can handle a $170 hit because it can move 40 to 50 in your favor on the very, very next trade. The euro, we have been pretty confident we're going to 131. I'm still confident that we're going to get there. We've got a P, we're extending the range up, so where might we find sellers? So I'm going to guess we're going to get stops above London. This will be my assumption. So I'm going to put a 45 to 55, sell 1, and then a 70 to 80, sell 2. Not really interested in the buy side, but obviously 10 to 20 is buy 1. Obviously, right? Not so obvious. And then buy 2. And this is a trade I do like at 131. We'll get a bounce out of there. It's a pretty safe place to have a resting limit buy. Okay, it'll take a while to get stuff up and posted. I've got a doctor's appointment at 3, so I may not get everything up and posted